Nice to see you. Grab a seat. Lovely to see you. Thank you. Grab a seat. Welcome. Hello to you all. So, as promised, let me introduce you to everyone here. With us, Shiv Sehgal, who is the President and Head of Nuvama Capital Markets, Nikhil Srivastava, Partner and Managing Director, Head of India Private Equity at PAG, and Aftab Mathur, Managing Director at Temasek. Welcome to you all. Delighted to have you in the studio. It's a little bit more cozy here. I quite like being here. So, Shiv, let me start with you. I posed that question in the introduction. Can you have both? Can you have good returns and good ESG?
Well, I definitely think you can, and India is a good example of that. We were doing some analysis as to when ESG started in India. And, it's actually, India was a bit late to the game in terms of ESG. The international funds started investing in ESG in probably 2017-16 onwards. In India, the offtake only really happened from the investor community in about 2020, 2021. And we now have, close to 10-15 funds in India, which are ESG dedicated. And we were looking at the returns that some of these funds have returned, and surprisingly, out of the 15 funds that we looked at, 12 are actually beating the Nifty. So the Nifty is the benchmark, the premium benchmark for India. So that answers your question. In India, even though it's a low historical database of only 3-4 years, the reality is that I think the ESG standards in India with investing are showing that it can be both an ESG narrative along with investments. But however, I think when you look at the international standards, the ESG funds are actually been lagging the index predominantly because of the fact that I think last year was a lot has happened internationally. The cost of funds is up. I think for the same dollar, you have debt, you have high growth, you have EMs like India. So I think the pockets of money where you can deploy are much larger. And as a result of which the international perspective is slightly changing.
And we'll come on to some of those elements in just a second. Aftab, I'm interested too about where in the world offers the best opportunities now with those ESG targets in mind.
Sure. So I think the US is probably the most advanced in this space, and I think that's where the most amount of thinking has been done in terms of building the frameworks for what ESG constitutes. I think it's always been a challenge, and it's always been a bit gray as to what is the key, how do you quantify ESG, and what are the kind of disparate data sources that you need to start formalizing to be able to actually incorporate ESG into your own investing philosophy and your own investing framework. But I think even to Shiv's point, I think for us, ESG is a core part of how we think about investing. At Temasek, I think sort of the key three principles that we invest, or our philosophy, is do well, do right, do good. And so for us, it's not just about financial returns, but also about incorporating ESG into our framework. And I think while in the short term, some of the challenges with some of the ESG-focused funds have been in the short term returns may be lower, but in the long term, we believe that the returns will eventually catch up and outperform the market. And I think some of the early data points that we've seen, whether it's by McKinsey or BCG, we're seeing companies that have a higher ESG or score higher on ESG markers are able to attract a lower cost of capital and are able to actually outperform some of their peers. In fact, there's a recent McKinsey report in 23 that showed a survey of, I think it was 2,300 public companies, and those that scored higher on ESG metrics actually outperformed their peers by almost 2 to 3 percentage points. So, as long-term investors, we believe that ESG is obviously a long-term play. We need to be one of the key proponents for it. And I think, just to be clear, the financial returns, we are finally a commercial investor, so commercial investments are core, and that goes without saying. But if the companies don't have a strong ESG framework, even if the returns are strong, we would have to consider whether we walk away from such investments if we don't think we can work with the management team to implement the right ESG practices.
That's a really interesting point, and maybe, Nikhil, this is the answer to the question I'm about to pose, but what is driving the demand for investments that meet those ESG targets? Is it that finally the message has got through that you can have both?
Sure. First of all, thank you for having me, and good afternoon. So I think maybe the way I think about the drivers is a couple of things. I think first of all, advancement in climate science has clearly highlighted to all of us the urgency of dealing with environmental matters. So I think both investors are more aware, both as a GP as an LP. I think what we've also found in our investment, as Aftab was talking, is that sustainability initiatives have actually resulted in commercial success. Yeah. And I'll give you an example where we have a pharmaceutical ingredient manufacturer, and there we diversified the sources of energy by adding more renewable and other sources. And as the input raw material for traditional sources of power have been quite volatile, the prices went up. Because we had a diversified source cost of power, we were able to be more competitive and therefore drive higher profitability. So I think that's sort of getting clearer to investors that if you do it the right way, I think it can actually lead to better results. I think the third point I would make is both the limited partners and the general partners are quite aware to the first point. And as Aftab was saying, the limited partners are not only focused on making money, but taking care of the society and the environment. Mm-hmm. And we as GPs want to be responsible citizens doing our part in terms of contributing. I think the last point I would make is our observation has been that companies with solid ESG practices have actually done a pretty remarkable job and in terms of facing economic and environmental challenges. So all of that has really led to sort of sustainability being embraced a bit more than it has been historically.
And Shiv, as the industry develops, is it fair to say that best practices are emerging? Because in the early days, it was very easy to get this wrong. Maybe it was about motivation, maybe it was greenwashing. We heard a lot about that. There was things like it was quite difficult to measure the impact of any sort of ESG investment. Data points are getting better. Are we reaching a maturity of how people perceive the value of these investments because we're just a bit better at measuring it?
Absolutely. I think stakeholders are demanding, that not only the corporate rate card for ESG is high, but I think even boards, investors, everyone is kind of acknowledging the fact that yes, especially in India, the E in ESG, environment makes about 60% of the weighting, right? We know how polluted India is. And the fact that I think historically we've talked a lot about it in the construction and the capex and all that's happening. But if I just had to take a step back and talk it from an ESG perspective, we are also talking, the government is talking about clean energy, renewable energy. And I think the new energy that India is talking about is going to play a very large role. And that's not only being talked about, in terms of financial press and the government, but it's getting, talked about in boardrooms, in corporates, irrespective of the size of the company. And I think that's a very transformational change that ESG is bringing about. And one last point to that, and I think given that this is a summit about India and then India in the next 10 years, I genuinely believe that India will not only take the lead, but provide a center stage for clean energy space to the global world. And the reason I say that, I'll just give two anecdotes. Renewable energy cost has gone down by 80% globally. Right, a lot of that has been led by China cutting the cost in solar modules and stuff that we all know of. But India has the added benefit of irradiation zones, geographically based, and also we have the lowest engineering costs. Those two combined can provide a runway to bringing the E and ESG and the clean energy aspect to India in a very meaningful way, where we are not only going to import energy, we are also the third largest consumer of energy, but I think in the next few years, export energy. And the two largest conglomerates, including Mukesh Ambani, actually in his recent AGM said a lot about that. And to that point, India has started so much in the PLI scheme, which is the production-linked incentives, in solar modules, in advanced batteries, in every ecosystem of in the clean energy space, and that is translating into grassroots level stuff that's happening.
Yeah, and I have to have, on that idea of being able to measure and having better data around ESG, do you think that companies have got beyond now that idea of thinking, we just have to do this because we're going to tick a box, we're going to look like we're playing our part, and now they're actually doing it because, as you've discussed, it's financially lucrative, but also it is the right thing to do?
So I think, it's an interesting question because what we're seeing is that, I think over the last 3-4 years, there was this whole issue on greenwashing, right? And the whole point that a lot of folks would make these claims that we're doing all these different things. And when you actually went down deep into it, you realize that, and I think the regulators as well as LPs and GPs did a much better job to keep these folks honest when they made these statements. I think what we're worried now about, or something we're watching carefully, is this concept of green hushing. And that's the concern for us now. In fact, one of our portfolio companies did a survey, and nearly 70% of the surveyed companies were seen to be green hushing, where they don't want to talk about what they're doing in terms of their sustainability plans and even their broader ESG plans. And so we're trying to find that balance between holding people accountable for the ESG metrics. I think some of the large asset managers, some of whom were today, have started not even using the word and started talking about other words rather than talking about ESG. But I think this concept of green hushing is an issue, and it's something that we're paying close attention to make sure that we're finding that balance so that the data points that we require are a little bit more, I think, and that's been changing even for us. I mean, we were trying to figure out what are the kind of framework to measure sort of to measure where the company is on its ESG journey. And even for us, that's evolved over the last 2 to 3 years as well.
And Nikhil, what's your approach to this? I mean, is there a bit of sort of green hushing? Or is this about just being transparent and saying, this is what we do, this is why we do it? Yes, it's also financially lucrative, but it's because it's the right thing to do.
Yeah, I think that's an interesting question. So the way I think about it is in 3 parts. I think the first and foremost, you need to adopt a framework so that you understand what it is that you're trying to do. And we've been one of the leaders in terms of adopting it, but a lot more private equity firms are doing it. And there are examples of standards frameworks that already exist. So the UN standard that already exists, people are adopting. So I think that's the first part of it. Yeah. I think once you've set the framework, you need to clearly lay out the goals that you want to pursue. And that becomes quite important also in the context of then identifying what metrics you use in order to see whether you're actually meeting those goals. As a wise man once said, you don't improve what you don't measure, right? And so I think it's important to actually use the framework, identify your goals, identify the metrics, and track those. I think within private equity, what we've done is really integrating the sustainability journey in the entire deal life cycle. So when we start diligence for a company, we've worked with third party to create a checklist and a framework that we go through the diligence process. Once, if we were to move forward on that transaction, we would make a 100-day plan, which is sort of an action plan for driving changes in the company, and sustainability and ESG is part of that 100-day plan. And post that, we are continuously monitoring and basically figuring out if there are any incremental interventions that are required. And I think just going back to the point of we're doing all of this, but is it transparent enough? And so I think publishing a lot of those reports as part of an annual agenda, and then getting third party to actually audit the data so that it's not like the company is claiming all of this, we are actually doing it. Getting third party then drives transparency in terms of what we're reporting, and I think it's for everyone to see. So I think it's a comprehensive approach that we are pursuing at our firm.
And Shiv, I'm interested then as well in how this translates to consumers, to users, to the wider economy. In terms of, have we got the message that it can be mutually beneficial? Because everyone always assumes there is a trade-off, that you're doing something because, and we've discussed maybe the reasons why, but it could be better. Your approach to the environment or to social welfare might be better if you just took a little bit less profit, or you don't. What is the ratio? How do you split? Okay, this is our ESG goal, but we also need to make money. Where do you come down on that balance between the two?
So I think that's a great question, Ben. There's going to be a delicate balance. Corporations inherently are built on profitability, so there is going to be always this tussle as to, how do you find that true balance. Where you are providing to society, providing to the right stakeholders, but also being profitable so that, your investors are not, I would say, disadvantaged while you are doing the ESG scorecard. And I think it boils down to a lot more education, information, and as, Nikhil was rightly pointing, so having the right framework with the right key stakeholders. And I think ESG started off on the right note in the Western world, but the last 2-3 years it's become a bit of a buzzkill, and there's been a lot of negative, I would say, press towards that, especially in the US and Europe. But as I rightly said so, earlier, I think it's got to do with the environment that 2023 saw. We saw interest rates going up, we had inflation, we had supply chain concerns, we had geopolitical issues with Russia and China. And I think all that translated into the fact that if you just look at the data, we had passive investors like BlackRock and State Street and Vanguard. Most proposals in 2020, 2021, almost 40 to 50% of them are funded by these passive investors. Come 2023, that rate dropped to almost 8.5%. And hence, I think there's been a lot of chatter that for the ESG funds particularly, that there's been a little bit of a political backlash to the investor community that, are we going in the right framework? Are we going in the right track? But I do think that it is the right message. Yes, we have gone through a bit of a volatile phase, but that's always going to be, the investor community is fickle. We have a recency bias, and ESG funds are not going to be, be any different from that. At the end of the day, it is an investment. But as you rightly said, so finding the right balance is going to be tricky. But if the boardrooms make that decision and your stakeholders understand that, I think that's going to be the right answer.
Yeah, and Aftab, Shiv is right in that if the business is not successful, if the business isn't there, then it's all well and good having all the ambition in the world. You can't deliver any of it. But do we need to stop rewarding business for offering a few crumbs and saying, look at all this wonderful stuff, and actually hold them to account? It shouldn't be a nice to have. It needs to be fundamental to who they are. Mm-hmm.
No, absolutely. I think there has to be a clear, tangible measurement. And I think it's, in some levels, it's not even just absolute, but also relative, where, for example, even for us, people ask us, should we be investing and even holding on to portfolio companies in, say, polluting sectors, hard to abate sectors. And for us, that has been a very clear message to the market that it's actually, if we can, rather than just be taking the easy way out, which is just offloading these assets, is actually trying to make the change from within, helping these companies get on their ESG journey. And I'll give you an example. We own an airline. Now, the airline is obviously very, emits a lot of carbon, and it's obviously doesn't score that high on the ESG metrics. But we're working with them on various different measures, including sustainable aviation fuel now, which they're one of the first airlines to actually actively adopt this and bring this into their own supply chain. And so for us, it's not just the absolute about what the companies are doing to talk about what they're already doing, but even the ones that are in tough sectors, looking at that relative, trying to help them in that journey and bring it down at least from a relative perspective.
And Nikhil, time is time, but a final thought from you. Can sustainable investing become the new standard? Are we now at the point where it can break out of that niche category and this becomes the norm?
Yeah, so I would say today, maybe SAN, it's a little bit of a niche that needs to transition to becoming more mainstream. Part of it is awareness, as we talked about. Part of it is it's going through a typical cycle. There was hype, there's now a phase of consolidation. There has to be data transparency so that people actually understand what's really going on. And then the point that Shiv was making, striking a balance between sort of what is the true purpose of the organization. It is profits and it is impacting the environment positively. And I think as more companies demonstrate that, I do believe in the medium to long term, this will become an integral part of the investment process for private equity and firms in general.
Really wonderful to talk to you all. It's been a really fascinating discussion. Thank you. Shiv, Nikhil, Aftab, really grateful for your time. Thanks very much.
Thank you.
Thank you. Thanks, Alex. Thank you very much.
Nice to see you. Thank you.
Thanks.
Cheers. Thank you.
Thank you.
Thank you so much.
Thank you.